Hey guys, welcome to Trade in the Charts. My name is Rex and this is Tesla Daily Analysis number 154 for Wednesday, March 16, 2022. Introducing new to the channel are channel memberships. If you're a fan of this channel and would like to show your support, be sure to become a channel member for as little as $2.99 per month and enjoy special membership perks ranging from connecting with me via social media or email to making special requests for analyses of a stock of your choice. Check out the different membership tiers and find which one best suits you. Thanks again for all your support. It does not go unnoticed and is much appreciated. On Wednesday, Tesla was up 4.78%, closing at $840.23. A pretty volatile day for Tesla as it started the day off with a pop. Then after the Fed announced a rate hike, it sold off and erased all gains. And at the lows of the day, it was bought back up in a sharp V-shaped recovery. At its highs of the day hitting 842, it approached resistance of the 200-day moving average at 847. As I've said in the past, it will need to break back above the 200-day moving average in order for the long-term outlook to remain bullish. If it is unable to recapture this level, then there will be long-term bearish implications. Because we are already trading in a downtrend channel going back to November to begin with. For the bulls, we will first need to break back above resistance of the 200-day moving average at 847. Then we will need to break out of the downtrend channel where the top of this channel currently lies at around 930. To the downside, if the 200-day moving average at 847 continues to act as resistance, then it is likely we could drop down to support of the bottom of the downtrend channel, which currently lies at around 680. Looking at the MACD, I am somewhat optimistic that Tesla will likely break to the upside versus downwards, because the MACD is forming a rounding bottom of a cup formation, all the while Tesla stock is trending downwards. This divergence in MACD and stock price trend is telling me that momentum to the downside is subsiding and starting to turn upwards. This is the same story looking at the technical indicator of the RSI. The RSI has been consolidating sideways while the stock price has been drifting lower. I anticipate the MACD and RSI to begin to break out into an upwards trend, which would lead to Tesla stock also trending upwards. So those are my price predictions for the day. Bull case, we will have resistance at 847. Above that, we will have key resistance at 930. Bear case, we will have support at 680. Now, on to Tesla news. Tesla Giga Shanghai to take 2-day break amid China's fresh wave of COVID cases. Tesla's primary vehicle export hub, Gigafactory Shanghai, is suspending its operations for 2 days. The halt comes as China deals with its latest COVID outbreak, which has forced the country to adopt stringent safety restrictions once more. The temporary pause in the massive electric vehicle production facility's operations was shared in a notice sent internally and to the company's suppliers. Considering that Gigafactory Shanghai operates around the clock, the loss of 2 days' worth of production would likely result in the company missing some of its output for this month. Provided that the facility could resume operations without delays following the 2-day shutdown, Giga Shanghai may be able to match or perhaps slightly exceed its numbers from last month. Tesla China delivered 56,515 vehicles, including 33,315 that were exported in February 2022. China is currently dealing with what could very well be described as the worst COVID outbreak that the country has faced in 2 years, thanks in part to the Omicron BA.2 subvariant, which is about 30% more transmissible than the initial Omicron BA.1 strain. Factories have been shut down across the country and in Shanghai. Authorities have asked numerous residents to remain in their homes or workplaces for 48 hours to as long as 14 days. This time would be used to conduct necessary COVID tests and implement contact tracing. I wanted to share an interesting statistic tweeted by Tesla Herbert. According to the tweet, Tesla has unmatched gross margin. Tesla's auto gross margin is 30.6%, compared to the average gross margin of major auto companies worldwide at 7.5% gross margin. Morgan Stanley analyst Adam Jonas toured the Tesla Fremont factory on Tuesday, March 15th, test drove the Model 3, Model Y, and Model S Plaid, and attended a meeting with investor relations. Here are his key bullet points. The Tesla Fremont plant is bustling to say the least. Tesla is demonstrating strong pricing power. Raw material impacts is felt, but not at the rate of pricing increases. Raws aren't keeping Tesla up at night right now. Chips are actually a bigger concern in real time. Capacity and margins. Full self-driving impact, and Tesla is raising prices from a position of strength and is still not seeing wait times go down. Tesla reiterated its guide to be comfortably above 50% volume growth, with or without Berlin and Austin. Thanks for watching, guys. Please hit that thumbs up if you enjoyed the video and subscribe for more content.